Hi, I'm Tim Kubarych, and I'm Co-Deputy Director of Research at Harding Loevner. I'm here with Safia Williams to talk about industrial gas businesses, the competitive dynamics of that industry, and what is kind of the growth opportunities for them. Safia, I got stuck behind a truck this morning, and it was a Praxair truck, so I thought of you. Are those trucks the main ways the gas companies deliver their products to their customers?
Actually, most of the gas by volume is distributed through pipeline networks directly to customers' operations. But other gas that's left over from those operations are distributed through trucks, like the Praxair truck you got stuck behind, and then also through smaller cylinders of packaged gas that might be sent to hospitals, for example.
What's the different economic makeup between those different types of distribution?
The on-site gases, which are distributed to customers through the pipeline network. Those are long-term contracts, typically 15 years, sometimes even longer. And then the smaller volumes of gas, those are shorter-term contracts, so maybe 3 to 5 years. Or for packaged gas, which a hospital might only need certain amounts 1 month and less the next month, those might not even have contracts. The lower the volumes of gas that you're selling, the higher the price that you can sell it for.
Some of these relationships are so long-term in nature. How do you think about the growth options for these businesses 10 years from now?
I think in general, these are very resilient businesses, and they tend to have relatively predictable growth trajectories. Having said that, there are certain developments that might influence the growth. For example, a few years ago, hydrogen was considered to be a really big opportunity in the industry. If that happened in the shorter term, then these industrial gas companies would have been able to grow immensely. But things take much longer to transition, and so their growth looked much more like the past. But there are other applications that are emerging for industrial gas molecules, and this is part of how these businesses grow, is not only are they going to continue serving the steel customer with the oxygen that they know they're going to need for the next 15 years, but they will also try and find what are some other ways that we can use this oxygen. And that happens in all sorts of industries, including electronics, for example. Hydrogen wasn't used in electronic manufacturing 5 years ago, and now it is.
What types of things do you look out for to kind of calibrate whether you're on the right track of understanding their growth trajectories?
I tend to look at it industry by industry. So I might be looking at healthcare and saying, well, more patients have chronic diseases, which will impact the demand for oxygen. I would also try and stay abreast of, what kinds of things are Air Liquide or Linde investing in their R&D? What kinds of applications might they be looking at, and what could the potential addressable market for those applications be?
And how do you gauge whether management of these businesses is effective at turning the ship towards these opportunities?
I would be looking at their project pipelines. So every quarter, these companies will announce, we have this many $1 billion of capex that we've committed to investing in future growth. There's going to be so much growth that's coming from India, China, Latin America. These are markets where industrial gas has so much room to grow.
Why would I expect this kind of insatiable structural demand to be met by the likes of Linde or Air Liquide rather than a local player in Japan or China or India?
Well, Air Liquide and Linde have actually been in these markets for a very long time, so you could argue that they are also local players in these markets and have the existing scale there. A lot of the growth in those markets will come from a company like Exxon saying, we're going to set up a new steel mill in China. And then who are they going to partner with? Well, they've already partnered with Air Liquide on this project or Linde on that project. So brand identity does come into play here, knowing that you can partner with a trustworthy company. So it makes it more difficult for smaller incumbents to gain a foothold. Having said that, there are some markets where, you might have a smaller company that serves a local region.
Yeah, look at the maps of TJ Maxx versus Ross, and it's so clear that they have divided up the country. It is really interesting, the building out of density for the areas at the borders.
Well, one thing that I know Linde does is they will look at satellite imagery of their production, and they will have AI identify air separation units on the images, and then if the air separation unit has the Linde logo, then they know it's theirs, right? And so they're going to be looking for areas where there are literally blank white spaces, but also to try and find, like, where does Air Liquide have an air separation unit that would make sense for us to try and sort of encroach on their space. And I thought that was a really cool use of AI, but also kind of does help you think about how they are literally looking at their distribution network and which customers they can serve and how they can densify that network.
It sounds really hard to enter the business if they have all these kind of capital requirements, these long-term partnerships. Rivalry doesn't sound that harsh.
Rivalry is intense when there's a new big project that's coming on the market. So, for example, Exxon has a project in Baytown, Texas, and apparently that was very competitive to get that long-term contract with Exxon. That's for blue hydrogen.
And who won that?
That was Air Liquide who won that. However, I'm not concerned that these industrial gas companies would aggressively bid on prices to the point that it's not profitable for them.
What do you think is misunderstood about these businesses in the market? There's all these kind of attractive attributes that you've talked about, huge barriers to entry, these amazing long-term contracts that provide resiliency that you described. Is there any controversy or skepticism to their long-term performance?
The market appreciates how predictable these businesses are and how steady they are. So in a recession, they will still be able to make money and they'll still be able to generate profits. I think the thing that I sort of find more interesting is staying abreast of where are the new end markets by region and also by industry, where these companies are looking to invest their capital and find new applications for gas. Those are the kinds of things that I think investors should be paying attention to.